Okay, everybody, it's me, Gregory Mannarino. Just a lovely day. Wasn't that fun? I'm sure you had a good time. All right, look, people, let's talk about this freaking market here. It's very interesting. If nothing else, it's interesting. What else could be more entertaining than this? Let's be honest with each other. All right, look. So yeah, this is my post-market wrap-up on this really incredible day in the market here. So Thursday, May 5th, 2022. So what happened? Well, stocks took a freaking nosedive. The Dow Jones Industrial Average giving back everything we put on yesterday and then some, like 1,000 points. NASDAQ getting hit the hardest here. Crude oil still finished higher, and if you just happened to notice, you also witnessed oil and gas producers sell off. Panic selling. Okay, panic selling. And who knows? We did breach that key level on the S&P 500. Now, I want to talk more about that real quick. Honestly, today's sell-off, the extreme of it, again, this is definitely some panic selling here, took me by surprise. Honestly, I had said just yesterday that it would take something big to break below that 4150 level on the S&P 500. We have broken below that 4150 level. Does that mean more losses are coming? It may mean that. Okay, we need to keep our eyes on a few things. Now, with that said, I want to draw your attention to something that I've spoken about a number of times repeatedly. And that is the MMRI, Mannarino Market Risk Indicator. Today, the MMRI was, we're talking about a shade under high risk. The MMRI, again, is not a crash indicator. It's about gauging risk. Now, every single one of us out here has a different risk tolerance. Me personally, my risk tolerance is in the stratosphere. It literally is. Some people who are risk averse should think about what this means for them now that we have the MMRI. It's just under high risk, especially in the current environment. Let's back up just a little bit. Me and my lions, people who follow this blog, have been net long this market for years. And to say the least, I am more than certain that my lions will step up here and explain that we have made almost embarrassing amounts of money in this market. It's been stupid. It's literally been, how many times have you heard me say that? It's just, it's retarded. It's been like, taking candy from a baby here for years and years and years. A lot of people, including myself admittedly, have benefited greatly from the stock market being long. Well, what has happened since early January? This market has fallen. We still remain, with regard to the S&P 500 and the Dow Jones Industrial Average, in a technical correction. Doesn't mean we're not crashing, people. Okay, I know so many of you believe that's where we are, and we may be there. Okay, the NASDAQ, yes, it's in bear market territory. But the bottom line is, look, nobody can expect, a constant, almost ridiculous amount of cash to come in without giving a little bit back. Okay, and that's where I am right now. That's where probably a lot of my lions are here too. But you have to be grateful for the things. This market has been a gift that has kept on giving for years. Now, I'm not saying it's even over here. I just want to put this into perspective. For years and years, we've been long this market. For years and years, we've ripped this face off. And so now, okay, some of our positions aren't doing very well. Not every single one that we've taken on as of late is in the negative. Some of our positions have done exceedingly well. Oil and gas producers, commodities here, a couple of our tech stocks. It's not all of them. But anyway, just as an example, between yesterday and today, yesterday, obviously, I put on some very nice gains. in my portfolio. I'm sure that's the same for a lot of you out here. Today, we gave about half of that back. Actually, for me, it's about 45% that I gave back. Okay, still ahead of the curve here. But look, this has not been a great year for anyone that's been long this market, but let's look at the bigger picture. Honestly, anybody out here who's complaining that has been net long this market for years, there's something seriously wrong with you. You have made ridiculous amounts of money in this market, so just be happy with that. Nobody can point at a specific day or a time or when this whole thing is going to roll over. And I'm not even saying that we're there yet. Look, let me put a few other things into perspective for you. It should be evident to you if you follow me for X amount of time. I have been a huge advocate of being diversified, of being spread out, of being in both risk on and risk off assets forever, literally since the beginning here. Okay, being in, kind of hedged like that. I would never put all my eggs in one basket, whether all in equities or all in physical gold and silver or all in cryptocurrencies. You got to remain spread out. And I've told you this like forever because, again, it's impossible to nail the exact time and the exact date. Now, what we've seen today, the fact that, over the past several days, we definitely breached that 4150 level in the S&P 500 with the abysmal economic news from today. I mean, this is a real shocker. A 75-year low with regard to U.S. productivity. Meanwhile, we got, the propaganda ministries every freaking day now been telling us how great our economy is, how strong we are. The Federal Reserve, we're, doing great. You can't make this stuff up, but you knew all this. It's all been fake. It's all just been absolutely, out of control with regard to distractions, deceptions, and outright propaganda. But anyway, look, so what's going on here? If you are a follower of this blog, if you've been with me for a long period of time, you know exactly what you're doing and you know why you're doing it. I mean, and again, I am not saying this is over. It very well may be over, looking at a few things, but at the same time, we must consider the fact of the environment we are in. We have central banks that are going to continue to inflate, period, the end. It's not going to stop. Is it possible that, like I said, and look this up for yourself if you don't believe Greg Mannarino. Today, the S&P 500 is in a technical correction. We're not even in bear market territory. Yes, the NASDAQ is, but not the S&P. Okay, and that's the broader market, which everyone really should be looking at. With regard to the MMRI, link in the description of this video. Now, we're just about at 200, which is high risk. Think about what it means for you. If you are a person, yet again, with a low risk tolerance, there is nothing wrong with, taking a step back from the market. If you are playing with cash, you cannot afford to lose. Or again, if you just have that lower threshold with regard to risk, there's nothing wrong with stepping out of the market for a little bit here. Preserve some of your capital for a better time down the line. It's really not hard. I still say, remain in risk off assets, obviously physical gold, physical silver, more specifically platinum, palladium. Now, with regard to cryptocurrencies here, look, you all know I've been buying Bitcoin since around 3,000. To say that I have made a substantial profit in cryptocurrencies is an understatement, okay? Now, I will not be selling any of my cryptos anytime soon. I am focused on one thing, one and one only. The reason why I hold cryptocurrencies is one reason, and one at all. That is the inevitable implosion in the debt market. I sincerely believe this. Could I be wrong at what I'm about to tell you? But this is a conviction of mine, and I believe this is going to happen. Eventually, we are going to get a meltdown in the debt market. That's going to destroy the stock market. That's going to make a day like today look like a walk in the park. You understand? The market is going to crater. We're talking 80%, more than likely, 80 with regard to the S&P 500. 80%. All right. That is going to happen when? Who knows? Is it happening right now? Not sure. I'm not seeing that incredible, very rapid spike in the 10-year yield. Yes, the 10-year yield right now is over 3%. How many of you are surprised about that? I have told all of you for months that we were going to settle over 3% when the Fed started raising again. Remember, we had our 2% target over 2, and then the Fed stepped in and said, we hit that, okay, and we settled above 2. Then the Fed is like, all right, you know what? Inflation's out of control. We're going to be more aggressive. And then I said, okay, with that in mind, the market is repricing. You're going to see the 10-year yield settle above 3. That's where we are now. I think it's going higher. I really, really do. The dollar, did you see the dollar today? I mean, an epic surge higher with the comparative strength of the dollar. And that did weigh on the market, obviously. And that also was a big contributor to the MMRI. Again, a link in the description of this video, getting into a high risk zone. Now, if you are a person with a higher risk tolerance, again, look, don't compare to me. I think it's possible that I have the highest risk tolerance that you can have. It's really the truth. And everybody is different when it comes to the market. You have to evaluate what's right for you. May not be right for the next guy or the next girl that's in this market. What will Greg Mannarino be doing here? All right. Well, I'm not going to change a damn thing. Again, I'm going to continually bet against the debt, become my own central bank, hold cryptocurrencies for the inevitable implosion in the debt market, for which I sincerely believe we're going to see the market capitalization of crypto skyrocket. So that's the sole reason why I hold crypto, okay? Because I believe the debt market implosion is going to cause a tsunami of cash to move out of the debt market, out of the stock market, into commodities, into cryptos. I am not a trader of cryptos. I have never traded a cryptocurrency ever. I hold it. I have been buying these things. I have not bought cryptos in a very long time. I already have a good amount of it. Not saying I'm not going to get more in the future. I certainly might. I also haven't bought gold or silver in a long time, but I've been buying this stuff for years and freaking years. I've been buying silver since it was like $8. So, with regard to the market, I'm not going to change anything right now because, again, I'm focused on the implosion in the debt market. I'm more than likely going to sit tight here. If I do see opportunity in any, especially the new positions I just put up on my website, right here, traderschoice.net, right under the chat room, my most recent stock picks. Will I be buying more? I would love to own some of these companies cheaper than they are now. They're paying me every quarter from these companies and others. I get paid a nice dividend. It's pretty cool. It really is, honestly. Anyway, so that's the situation with where we are now. A market that really was throwing out the baby with the bathwater with regard to seeing the sell-off in energy producers here with crude oil higher. I mean, there's no doubt that that's going higher in my view. It's been doing that. It's going to continue to do so because inflation is not going to stop. I don't care what the Fed does at this point. They can't just automatically say, okay, this is it. The Federal Reserve has been in the business of inflating now since literally the last meltdown and inflating on an unbelievable scale. So all of a sudden, they're going to nudge that federal funds rate and maybe wind down their balance sheet and all of a sudden it's going to stop. How about no? It's just not going to happen. It's going to surge higher for a while. And who knows where else this can possibly go. Anyway, with regard to risk on and risk off assets, risk tolerance, I hope I put this together for you. All right. Do not panic. Don't rattle. The moment, read some of the comments here. I've had to delete some of them because I'm getting called every name under the sun by some of these people. I will not tolerate that. All right. You want to present a real case about something, do it. All right. Like I said, I'm all about that. But you're going to start, making personal attacks. You're gone. You're out of here. All right. Look, everyone is entitled to their own opinion on what's happening. All right? I pretty much laid this out. We have risk in this market that is pretty high. It's high. It's just about high right now. Look at the MMRI. Couldn't be more plain. We have a S&P 500, which has broken a critical level. Let's see where this goes. And if you have a low tolerance, there is nothing low risk tolerance. There is nothing wrong with preserving capital, pulling some of those positions. Again, if you've been with me for all these years, you've made a lot of money. You've made stupid amounts of money. Let's be honest with each other. All right? Look, I'm not holding this back. Everyone knows that. It's just as plain can be. This market has gone straight up for years. And now over the last, since January, we go down and people are running for the hills. Why? I mean, okay, maybe this is the big one. Maybe it's not. I don't see anything happen in the debt market right now that's alarming to me. I really don't. But does it mean that the market can't fall further? But again, evaluate yourself, your risk tolerance. Where are you at? You want to preserve some capital. You want to sit back and wait. You still need to be in risk off, people. You always have to be hedged like this. This is how I sleep at night. I don't really care what the market does on a day-to-day basis, week to week. Don't matter to me at all. At all. It's zero. I don't sweat it. And I hope you don't either. Anyway, with that said, people, look, so you understand the situation. Market created today, gave back everything from yesterday. 10-year yield above 3, not a shock to a single one of you that follow this blog. That jump in the dollar today, wow, one hell of a move. Yes, this did take me by surprise. That's the truth. But I'm hedged. I don't care. Doesn't faze me at all. Like I said, my risk tolerance is in the freaking stratosphere. So it don't matter to me. I will look for more opportunities to buy companies that I want to own, that are going to pay me to own their stock. And I love that. I really, really do. Anyway, so with that said, I was writing a few other things down here. Definitely some kind of panic selling today. And will it continue? I don't know. Your guess is as good as mine. Let's see where it all goes. But the main thing is I don't want you to sweat any of this stuff, seriously. A lot of recession talk today, especially out of the Bank of England, that rattled the markets. The fact that we got, you want to talk about bad economic news. It was abysmal today, and yet the market cratered. Generally, when we get bad economic news, stocks go up. You know all that. Markets run in cycles. Boom, bust, boom, bust. We've been in a pretty big boom now for freaking years. Years. Is it time to get a bust cycle? Maybe. What are we going to do? You think Wall Street hedge funds are go out there liquidating all their positions? You think that investment banks are doing the same thing? You really do? How about no? Anyway, look, I understand people get afraid, and I told you, it's all about risk tolerance, honestly. All right, look, I don't want this video to get too stupidly long. It is kind of long as it is. I think I covered this for you. I think you have an understanding of at least where my head is at, where I have been for years, being diversified, having your portfolio set up in risk on and risk off just for a situation like this. Appreciate the gains that you have put on already in this market over X amount of years. I mean, come on, people, really. It's nuts. I see people, I know people who, I used to play a lot of poker. I used to play a lot of blackjack years ago, as most of you know probably. And I would watch people sit there and make thousands of dollars at the table. Then all of a sudden, let's say they're up $5,000. They give $2,000 back, and they're like all up in arms about it. Really? Really? Oh, okay. I understand that kind of thinking. Don't work. Anyway, look. You know what to do. You know what you should be thinking about right now, okay, with regard to your own exposure. Is this really the big one? I have no idea. All I do know is that's all I worry about. And even then, I don't even worry about it because, again, I'm hedged. If this market were to roll over, and this is nothing, you think a 1,000-point drop in the Dow is a big deal? No. When we really get that implosion in the debt market, we're going to get thousands of points peel off of the Dow. It's going to be an epic moment. It's going to be very, very rapid. Boom, 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 boom. You watch. Mark my words on this. It should be very easy to understand because the debt market is supporting this entire thing. Once that implodes, everything else, we exist in a multiple bubble environment, and there are inverse bubbles as well. I'm referring to, obviously, commodities here, and I think cryptocurrencies because their market cap is going to balloon, in my opinion. You're entitled to yours. But that's how, look, it should be extremely simple for you to understand with what I have just laid out, how I believe this is going to happen as we move forward here. This does not have me rattled at all. If it's rattling you, again, it's because you have a lower risk tolerance. Maybe it's time to, get defensive here. Maybe it's time to get out. And there's nothing wrong with preserving capital. You understand? Look, you can't expect, no one can expect that, they're going to win every single time, every week, every month, every day. It's an impossibility. I don't care who you are, what institution you are, ain't happening. It should be pretty obvious. Anyway, look, that's it, people. I am so out of here. Very long video, big day, crazy day. I don't know about you, but I'm looking forward to tomorrow. I really am. And it's going to be just lovely. Every day's lovely. You know why? Because we are together. What else can I tell you? Love you a lot. Share the video. Please comment. Please comment, especially today. Check that MMRI, people. Go look at it in real time. There is a link down here. Shade under 200. Think about what you want to do. Do you want to get out of here, out of the market? Do you want to see where this goes? Really, where is your risk tolerance? Think about it. Today's the day. I'm out of here. See you in the morning.